हेलो व्यूअर्स, वेलकम टू द फर्स्ट वीडियो ऑफ दिस चैनल। आज मैं आपके साथ एक स्टॉक इन्वेस्टमेंट रिलेटेड बुक का समरी शेयर करना चाहता हूँ। बुक का नाम है वॉरेन बफेट एंड द इंटरप्रिटेशन ऑफ फाइनेंशियल स्टेटमेंट्स। वॉरेन बफेट दुनिया के सबसे सक्सेसफुल स्टॉक इन्वेस्टर हैं। बुक में ये लिखा गया है कि वॉरेन बफेट एक कंपनी के फाइनेंशियल स्टेटमेंट को कैसे चेक करते हैं, ये डिसाइड करने के लिए कि कंपनी में कोई कम्पिटेटिव एडवांटेज है लॉन्ग टर्म इन्वेस्टमेंट के लिए। तो चलिए देखते हैं बुक के कंटेंट क्या क्या है। बुक में मेजरली चार सेक्शंस है। इन फर्स्ट सेक्शन ये लिखा गया है कि व्हाट टू लुक फॉर इन इनकम स्टेटमेंट, देन व्हाट टू लुक फॉर इन बैलेंस शीट, व्हाट टू लुक फॉर इन कैश फ्लो स्टेटमेंट, एंड फाइनली हाउ टू वैल्यू ए गुड कंपनी। वॉरेन बफेट के कुछ रिकमेंडेशंस है स्टॉक इन्वेस्टमेंट को लेकर। तो देखते हैं उनके क्या क्या रिकमेंडेशंस के बारे में बुक में लिखा गया है। डोंट वेट फॉर लोअर प्राइस, इंस्टेड पे फेयर प्राइस फॉर a good business and hold for long term. To get more benefit, never sell such stock and also avoid paying tax until sold. Buy stocks with any of these three business models: a company selling a unique product or selling unique service, or the company is the low-cost buyer and seller of a product or service that the public consistently needs. Consistency in product creates the consistency in company's profit. Such companies do not need to spend more in creating new products. Firms selling unique services that own a piece of the consumer's mind can produce better margin than firms selling products, as the service company does not need to invest much in redesigning its product, building a plant and warehouse. Long-term durable competent Long-term durable companies are consistent in high gross margins, little or no debt, little or no spend in research and development, earnings, growth in earnings. अभी देखते हैं कि इनकम स्टेटमेंट को हम कैसे इंटरप्रेट करें। Operating expenses. One of the greatest secrets to making more money is spending less money. Selling general and admin expenses. The lower the company's selling general and admin expenses, that is better. Consistently low is better. Research and development. High research and expense cost is bad. Depreciation. Lower depreciation cost is best. Interest expense. Lowest ratio of interest payment to operating income is best. Banking and financial institutes are exceptional. Net earnings. Consider the earning of a company in pre-tax terms. Income before tax. Make sure the company declared after tax in the balance sheet is matching with the tax paid. Net profit. The net profit should be upward trend and consistent. Net earnings. Companies with competitive advantage will report higher net earning to revenue than its competitors. More than 20% is good. Earning per share should be long-term upward direction. अभी देखते हैं कि बैलेंस शीट के एसेट कॉलम को हमें कैसे इंटरप्रेट करना चाहिए। कैश एंड कैश इक्विवेलेंट्स. Company with a lot of cash and marketable securities and little or no debt can sell through troubled times. Look for the cash hold for at least last 7 years. Inventory. For a manufacturing company, look for if the inventory and net earnings are increasing together. Net receivable. Company with competitive advantage consistently show a lower percentage of net receivables to gross sales than its competitors. Property, plant, and equipment. Producing a consistent product that doesn't have to change equates to consistent profit. A company with durable competitive advantage does not need to spend consistently for plant and equipment to stay competitive. Goodwill. Business with advantage never sold below their book value. But whenever it happens, it is a lifetime opportunity to buy that. Intangible asset. Companies with a brand value and good earning power has competitive advantage. Brand value is not shown in the balance sheet, but it can be considered for valuation of a company. Long-term investment. If the company has long-term investment in another competitive advantage company, then that is good. Even if the real value of the investment would have appreciated, that would not be shown in the balance sheet. Only the invested amount would be shown. In that case, the company's real value would be more. Total assets. Check return on asset ratio. Sustainability of competitive advantage depends on company's asset. If a business needs more asset to function and service, then it is very difficult for a new company to come and compete with that business. But if a business requires less asset to operate, then any new player can come and compete. अब देखते हैं कि बैलेंस शीट के जो लायबिलिटी कॉलम में जो डिटेल्स हैं वॉरेन बफेट उसको कैसे इंटरप्रेट करते हैं. Short term debt. A stable and secure financial institute should always borrow money for long term and lend for long term. Long term debt. Companies with durable competitive advantage should have little or no long term debt. Look, look for such debt for 10 years. Companies that have enough earning power to pay off their long term debt in under 3 or 4 years are good candidates with long term competitive advantage. But make sure such companies have not taken money on issuing bonds or the owners have taken money from market showing the profit. Current liabilities. Companies with current liabilities greater than current asset are at risk of liquidity. But certain companies with bad liquidity can still have competitive advantage if they have good earning power, like Coca-Cola. Debt to equity ratio. A good company will use its earning to finance its operations and therefore should show a higher level of equity and lower level of liability. Debt to equity ratio less than 1 is good, but if there are some exceptions like financial institutions as they borrow more money and lend those to earn interest. Also, there can be exception when a company has less shareholders' equity, as it buybacks those with its profit money, and the debt would be more than the equity. So pay attention to those cases. Preferred versus common stock. Companies with durable competitive advantage tend to not have any preferred stock. Retained earnings. Companies' retained earnings rate should grow year on year basis. That money company can use to increase the business and ultimately shareholders' money. Treasury stock and share buyback. The presence of treasury share in the balance sheet and the history of buying back shares are good indicators for a company with competitive advantage. Return on shareholders' equity. High return than peers and average means good company. Negative return, but if the company has consistent growth in earnings, means the company is paying off all the profit as dividend. So could be a good company, but check consistency in earnings growth. Leverage or debt. Companies which use leverage or debt money for their regular business stay away from those. There is a huge difference between the business that grows and requires a lot of capital to do so, and business that grows and does not require capital. Look for the later. कैश फ्लो स्टेटमेंट। अब देखते हैं कि कैश फ्लो स्टेटमेंट के जो डिटेल्स हैं उसको वॉरेन बफेट कैसे इंटरप्रेट करता है। Cash outflow on a capital expenditure. Good companies uses smaller portion of its income on capital expenditure. Less than 25% of net income is very good, and less than 50% is good. Look for this trend for at least last 10 years. Share buyback. Good companies buy back their share if they don't invest in the expansion of the business. Even for buyback, look for last 10 years trend. अगर आपको ये वीडियो के कंटेंट पसंद आ रहे हैं तो प्लीज़ इसको लाइक करें, शेयर करें, चैनल को सब्सक्राइब करें और बेल आइकन को प्रेस करें। अगर आपका कोई कमेंट या फीडबैक है तो प्लीज़ कमेंट सेक्शन में लिखिए। बुक के फाइनल सेक्शन में ये लिखा गया है कि वॉरेन बफेट एक कंपनी का वैल्यूएशन कैसे करता है, वो कैसे कैलकुलेट करते हैं एक कंपनी का पर शेयर वैल्यू। For example, if a company's pre-tax earning per equity bond or share is $3.96 and the current corporate interest rate is 6.5%, then the company's per share value would be $60. And how that is calculated? The pre-tax earning per share is divided by 1% of the current corporate tax rate. वॉरेन बफेट कैसे बिजनेस को प्रिफर करते हैं? उनके हिसाब से he looks for businesses in which he can predict what they are going to look like in 10 to 15 years time. Take Wrigley's chewing gum. He doesn't think the internet is going to change how people chew gum. Thank you for watching this video. अगर आपको ये बुक इंटरेस्टिंग लग रहा है या अगर आप चाहते हैं ये बुक को पढ़ के कुछ और ज़्यादा सीखने के लिए, तो वीडियो के डिस्क्रिप्शन सेक्शन में बुक बाइंग का लिंक दे दिया है। आप उस लिंक पे जाके बुक को बाय कर सकते हैं। थैंक यू फॉर वॉचिंग दिस वीडियो।